It seems the bullish trend we've been seeing in major US indexes like the S&P 500 is back on track following that pullback we had at the end of January. Although this is Tuesday before the US market open, and at the time of filming this, the futures market is down a little bit. But if we look at last week, the S&P actually gained 4.6%, and the reason for this continuation of the bullish move is really building on the themes that we've covered in previous videos on this channel. So first up, of course, is the stimulus package. Last week, Democrats pushed forward with a plan to bypass Republican support, and they're basically doing this because the typical way of passing fiscal stimulus would require 60 votes in Congress in order for it to pass, and with Congress being a 50-50 split, that would mean that they'd need some Republican votes to get it through. But the Republicans aren't really on board with the package as it is, and they've already been trying to negotiate it down. So it's almost like a flashback to the 2008 financial crisis, when the Obama administration, which obviously included Joe Biden, also were relying on Republican votes for fiscal support and ended up having to go with a limited package to get it passed. So this is a situation the Biden administration and Democrats are keen to avoid, so they can get as much of the package through as quickly as possible, ideally by next month. So this time it's being put through as a reconciliation budget measure, which simply put means that they can pass it with a simple majority, one that the Democrats can do on their own, with the vice president being the tiebreaker. However, doing it this way does limit what can be put through. So, for example, the $15 minimum wage that's been discussed a lot won't be able to be passed this way and is therefore going to have to be removed. Although it has been promised that this would make a return at some point in the future, so I'm sure that's not the last we'll hear of it. Now, another reason for the positive outlook, this bullish move in stocks, is the changing direction of the pandemic. More specifically, the infection rate and data for the US showing that daily trends of COVID-19 cases continue to decline from the highs that we had at the start of the year, and the weekly number of new cases has dropped 30% in 2 weeks. The vaccination program in the US is also doing well under the coordinated federal effort, and at the current rate, it would take around 10 months to vaccinate 75% of the US population. Now, the main problems at the moment are with the limited supply of vaccines rather than poor logistics rolling out the vaccine. However, new vaccines are also on the way from Johnson & Johnson, who filed for emergency authorization, and Novavax are going to be applying for that soon as well. So there's a very positive sign that the economy may be able to fully reopen again without the threat of further shutdowns in the future. But something we have to keep in mind is that the vaccines are showing less effectiveness against some of the variants that we're seeing popping up. And as a result, South Africa has actually suspended the rollout of the AstraZeneca vaccine, but manufacturers are already working on boosters that are meant to tackle the problem of these new variants that are appearing. And you know, something else which we haven't really covered much on this channel so far is company earnings. Around 60% of the results are in for S&P 500 companies, 80% of them have beaten earnings estimates for the fourth quarter of last year, and companies are now expected to show earnings growth of 1.7% for Q4, which is a massive improvement on the forecasts, which expected a decline of just over 9%. The main thing this shows is that year-over-year earnings growth has returned, so it's an end to the earnings recession that we were going through. There was also some positive economic data last week, as the ISM Services PMI and durable goods orders both came in positive and above expectations, although it obviously wasn't all good news, because on Friday, the US jobs report showed that the labour market is perhaps stalling, with only 49,000 jobs being added in January and December's decline being revised even lower. However, despite this report being a disappointment, Janet Yellen, the Treasury Secretary, stated publicly that the US could reach full employment as soon as next year, 2022, if the stimulus package can make it through. Although Larry Summers was one person who was actually critical of the package and how it might cause inflation to end up being too high and cause instability, but he was quickly shot down by people saying that no one can manage that situation better than Yellen, who's in a long-term, very close relationship with inflation. So overall, it seems like there's a lot of positive news underpinning the current market rally, as the outlook remains positive for the rest of this year and next year, but there are still risks to consider, and the stimulus package is still yet to pass, and there are other potential hurdles and issues. But this was just one big picture overview, and things are looking quite good. So we'll see you in the next one. Thanks for watching.